There is one thing which is pending, not pending, I say. There is something which I want to tell you about some banking terms before we move ahead now. So on weekend I do some study. I investigated my old notes, and from that I found that this thing you should know. Customer and banks are very simple thing that I will ignore. Okay, what is customer and what is bank, and what is payment flow as well, because we have saw a lot of time a customer is there, bank channel is there, connection is bank there. Okay, we can ignore these things as well. Okay, and then it make a payment system. This also okay, clearing and settlement also we have saw what exactly gross and net clearing system, that also we have saw, we can ignore this as well. Okay, but something like charges and effects, that also we saw already. What is charges and our debit Ben Shah? Remember, right? We have see these charges on Friday. How our is calculated, how Shah is, how Ben is calculated, right? That day we have discussed 71F, 71G. But I want to introduce you a new term here. Not forex, FX. So FX conversion, how the FX is calculated, and because when we normally CBPR, when we are sending to a foreign countries. So in foreign countries, FX means is foreign exchange, means in how much you are selling your dollar and for how much rupees you're buying the dollar. So that is the ratio of FX calculation that normally happen in other world. So whenever you go to bank will buy from you dollar in very cheaper rate as compared to when they want to sell it. So that they do the business. So normally that's why this concept of forex I want to introduce you before we go process. Forex stand for the foreign exchange. Every country will have their own currency, which is called the home currency. Okay. And one more thing that I told you, right? All settlement happen in your native currency, your home currency. Settlement will not happen. For example, if you are transferring INR to USD, INR to GBP in pound, your INR is going to settle in only your country only, and GBP is going to settle in their country. So it will not happen. INR will settle in GBP. It will not happen like that. So that thing is say mentioned here. Okay, suppose you are given, is an example is given. Suppose you are given 1000 USD from your uncle who is it from US. Okay, and if you want to buy stuff from local grocery shop India, they might not accept the foreign currency. Correct? USD is not converted to INR. So you have to go to money exchange. You have to wait to money exchange given 1000 USD, and to surprise, if you will get only 70,000. Okay, because the rate is 70, INC is 70 only. This is expressed as USD INR. Okay, it's written like this. USD INR is 70. Means when you're selling 1 USD, the INR is 70, where 70 is the exchange rate. Got it? This is quite simple exchange rate. Coming back to the real world, in payment, there are three currencies involved in a single transaction. Transaction currency, which is current currency, debit account currency, and credit account currency. So three currencies may be same, may not be same sometimes. So transaction currency, for example, in the world normally, have you seen in the world always they calculated the all the crude oil prices, or the multi-millionaire acquisition and deal happens in the world, that always getting measured in dollar, because dollar has a universal currency as they says by US. Still they say we have to obey, but dollar is the currency for transaction normally. Debit currency might be rupees, credit currency might be pound, like that. Okay, like that. FX will come into the play if the transaction currency is not equal to the debit account currency or the credit account currency. So FX will come into play when both currency don't have same values. Normally it's happened, right? Our Indian currency is now almost touched to 85.90 now. So that's why a dollar is very costly for us. Okay. Okay. For example, okay, one general question here. If we buy more and more raw material and ready-made material from foreign countries, will our currency appreciated or depreciated? Just a logical question. If we buy more and more good from foreign currency, foreign country, sorry, not currency, foreign country like US and China and Japan, whether our current currency is appreciated or depreciated. If we buy Okay, that's not part of our syllabus, by the way, but just for we got here question. That is a topic of investment banking. Definitely, I will cover one day for investment banking for you. So our currency will be anyone? I will give the answer then. Depreciated, correct? Because we are selling our rupees, right? When we are selling our rupees, means we are selling our dollar for them, like that. So, so whenever doing an export, that's why our country is more focused on the export. So our currency will be getting valued a lot. Okay, that's not topic of discussion. Example already we have. We don't want to discuss now. Buy rate, sell rate, mid rate. Okay. Normally I already told, right? Though we are buying for 70 rupees, bank will sell us for 71. They will earn some benefit from that. That's normally happen. So sale rate and buy rate always difference from the bank perspective. Okay, so that's why there are three rate: sell rate, buy rate, and the rate at which the bank buys from you. Okay, normally this is happen. Maybe you are surrounding, you are aware or not. Some people bring dollars from US or euro or pound, and they keep with them. And if you approach to the bank and current rate is going on, for example 90, so they will buy from you at 85. Okay, because bank charge commission $5 from you, and when they want to sell to you, they will sell at 90 only. But okay, that's the thing. And when both average, mid rate is average of buy and sell rate, they will do average of that and they will sell to you. So that's a part of investment banking topic, but I thought to introduce you here, that's why I told you. Okay, and this thing I will not cover now. This is on investment banking topic. Okay, but yeah, SWIFT we already saw, SEPA we already saw, single euro payment area. Okay, IBAN we have discussed how IBAN form. Big also we discussed already what is big part. Accounting relationship, this is nostro and vostro concept that we have seen. Payment market structure, that also we have saw, that is payment market, PMI, nothing but clearing and settlement. Okay, that is RTGS, ACH, that we already discussed. Okay, this is new concept now, cutoff. Okay, normally cutoff, when you play, for example in India, when you're doing a transfer of payment, NEFT or RTGS, we have a cutoff of every 2 hours. Means in every 2 hours they will send a batch, and that batch will go your payment. If you send payment after that cutoff, your payment goes to the next batch, it will take longer time. So that's why cutoffs of payments are for different currencies, different country. And normally these cutoffs are set up in payment engine of every country. Okay, and that cutoff also, this cutoff is here as well, and cutoff timing as well, cutoff currency ratio as well. There are many cutoffs. But if I read out here, as a bank we need to know that the operation time of other bank in different time zones. And payment close to will not send payment after their closing hours. Whenever we send payments outside or outgoing, the bank payment engine, I just not told, right, payment engine check the cutoff time, and if the cutoff pass, the payment will be scheduled to next day or next time, like that. So this is a new concept I'm introducing here, cutoff. Hope you like it. You're fine with cutoff, Mahima and Shruti? Yeah. So this is newly I told today, cutoff. Else everything accounting, payment market history, you know these things. Okay. Now there is one more concept I'm telling you now. There are different dates also there in your payment. Okay. So I thought to discuss with you first before we actually see this date when you are got. Okay. So there is some date which is interbank settlement date, when exactly your payment is getting settled. Credit value date, when your payment sent. When actually normally these dates are may we say may not be same, but just for out of curiosity, I normally ask this to people, that to anyone, that how many dates you are know from your payment channel. Okay, so that time maybe if you're able to process, able to answer it, it's good. So the interbank settlement date, credit value date, debit value date, processing date, mean when exactly when the payment is getting processed. Normally all these dates are same only. Okay, but yeah, for identification of date, this may be a challenge for everyone, that who knows. Then booking date, for example you booking the ticket right after today, but you are booking for this date for flight ticket. At that date you are going to fly, and this date you may ask your bank to uh, partial payment of your account or credit card you're making on. Okay, they are the same concept but twisting each other. requested credit value date, requested execution date. Don't bother about this all this date, but at least you should aware that there are so many dates mentioned in your things. That's why I thought to know you that. Okay, I have mentioned value date. It is date on which the value of the funds became effective. I mean that day your payment became effective means we are calculated. The warehouse feature of a payment engine deals with a lot of these dates. FX can also come of these dates. Okay, these things. So there are these dates. Don't worry on the part of this which data there, but these dates are there. Let me see if okay, fine. Now we'll jump